Hi.
Can you hear me?
I can.
Okay. There's no power at my office still,
My
so
gosh, Shauna, I can't believe that's so crazy. I'm sorry.
it's okay. Let me see if it looks, I feel like it's so bright. Well, is that better? I feel like the lights were a little nuts.
Yeah, it's hard to know. I'm not very good at that kind of stuff, but I'm at home today too. So I'm babysitting a dog that I couldn't leave. So
What have you been up to? How's business been going?
it's good. I'm hanging in there. It's a little crazy, this market that we're in.
Are you still pretty busy?
I've been busy this morning, so it ebbs and flows a little bit, but I've been able to stay busy, so that's really good because a lot of people have quit in the mortgage business.
Yes, so many people have.
Yep.
It's sad and
It
scary.
is. It is. Yeah, definitely.
It's definitely affected like my referral business at Bolt, because all my
Yeah,
business is mostly from mortgage.
right.
So I'm grateful to still be going.
I know, right? That's what I keep saying. I'm like, every month when I make my house payment, I'm happy.
Yep, it's true. Can you hear me okay? It doesn't sound echoey?
It doesn't sound echoey. Nope.
Okay. Sorry, one more second here.
That's okay. We have I think last I checked, 56 people signed up. So we should have a pretty good class.
You want to do a class when?
I said we should have 56 people signed up. That's what it said last time I checked. So we should have a good class.
Ooh, that's awesome.
And do you want to
So what
do
do
the
you want me to
keywords?
talk about for you? Any special, anything that you've got going on and that you can offer that you want me to mention to
I
these
mean,
agents?
we still do our 10-day close. So I like to use that when people have a little bit tricky income or things like that. So, and the market is starting to get more and more competitive.
Okay.
So I can do
And
the
they
10-day close
closes?
even on FHA and Utah housing. Um, but yeah, just, if you have people that need help, like send them to me, right? So, and then if they have credit issues, we'll get them over to Shauna. So if people do what you tell them to do, they get back to me. If they don't
It's
do
so quick
what
if
you
they
tell them
do
to do, they
what we
don't.
say. Like sometimes it's incredible how quick it could be if people actually do what you say, what we say, all at the same time. They'll
Hmm.
really get good results in a
So I have
short.
a kid right now. He doesn't have problems necessarily with his score, but he has a debt that's on credit that he says he's paid 5 times to Zions Bank. It's $110 and he's paid them 5 times. It doesn't show collection. It doesn't show anything. And every time he calls Zions Bank, they say, we don't show that account. But it's still showing that he owes 110 and that he has a $25 minimum payment. Can you guys help him with that or no?
Yeah,
Okay.
yep, you can fix that.
Okay, I'm gonna send him to you then too. It's
Okay.
not really hurting his ability to buy. I just feel bad for him that he's paid that $110 5 times. Like, that's crazy. So, okay,
Credit is annoying.
I mean, stuff like that is annoying. And I'm like, you really need somebody who knows what they're doing to help you with that. Because all I would think to do would be to call Zions and say, stop doing this. I paid it 5 times. So I'll send him to you. There's people in the waiting room. So just tell me as soon as you're ready to let people in, but we still have 4 minutes. So,
Yeah, so I just want to make sure my share screen is up. Do you see
okay,
my This is Credit?
I do.
Okay. So you see my presentation there. You can see me here.
Yes.
Is my service, dang, my service has been great. And now all of a sudden that I'm trying to do something.
Are you back in your house?
I'm in my house.
Okay.
Is this delayed?
I mean,
Hey, Kendall.
it's just kind of going in and out, but I don't like, I think that's part of this, the slideshow, isn't it?
Oh, you think it's maybe because my slideshow is
Like,
animated?
yeah, I think so. That's what it looks like to me.
Crap. I just don't want it to affect you guys being able to hear me.
I can hear you perfect. I don't hear any kind
Okay,
of,
great, because I feel like my service isn't the best right now. So I'm so sorry about this, Eden, and having to move the time. But you can start letting people in anytime.
okay. Don't worry about that whole move in the time because I hadn't even sent it out. So it wasn't like I had to do anything. That was fine.
Okay.
Do you want to do like we've always done where people just email me the words and then I send you a list of people to bank? Is that what would be easiest for you?
Do you want to do that, or do you want me to just have them email me?
Um, I think if they email me, then I'll know who came and then I can send it to you. Is that okay?
Okay, that works. Hi, everyone. Can people hear me? How's it going over there?
Hi, I don't know how many people are in here.
I can hear you.
We have quite a few people signed up, so I think this should be a great class. And I'm really excited that Shauna could do this today. She's in Texas and they've had some issues with the weather.
Yes.
What do you call it? Do you call it I don't know what you call it. Tell me what you
Well,
call it.
they were calling it a hurricane, and then
Okay.
they brought it down to a tropical storm. But I mean, I've never been in a hurricane, so that was my first one.
Yeah, so we're
And
glad
we
she's
were
here.
okay. We just didn't have power, internet, or even cell phone service unless our cell phones would work if we left and like kind of got out into the city. But I mean, everything was closed, even driving. Like, I only had a quarter tank of gas and I had to go to like drive an hour to my old house to make sure it was okay. And trying to find a gas station that wasn't a 2 hour wait. So we had to wait for a while to get gas. And then that was just crazy. Next time I'll be more prepared. Usually Jonathan would handle that. And so, but my
Right.
daughter moved over here with me from Dallas, so at least I wasn't alone.
Oh, that is nice. Oh, I'm glad she's with you.
So you
So
moved to Texas?
Yeah, Texas.
I love it here though. I don't care that there was a hurricane. I like both. I just went to Utah. I'll go back. I'm in Utah like every other month. I just went over June 20th week. I was out
Okay.
there.
Okay. So I've
So
done a number of classes with Shauna and she really knows everything about credit. She's helped a number of my clients get their credit scores to a place where they can buy, get their credits increased, do all the things. Anybody that I have any issues with credit, that's not something that I can tell, like just a high balance on a credit card or something, I'm like, okay, you need to talk to Shauna because she's going to be the one to help us. So I really appreciate her coming and sharing her knowledge with us.
thank you so much.
It's 10:01, so I'm gonna continue to let people in as we start the class. We've got like 50 something people signed up. So we'll see how big of a class we have, but I think Shauna would agree that we like participation. So if you have questions, feel free to reach out to ask questions. We want to make sure you understand everything that you came to learn. And then to get your credit, you're gonna need to email me. So just ejohnson@securityhomemortgage.com. I'll kind of monitor the chat a little bit for you, Shauna, too. I know that's hard to do when you're trying to
Okay.
teach. And then at the end, yeah, I'll just give my email again and you'll just send 4 out of the 5 keywords. So as Shauna gives keywords, just write those down so that you can, I'll put my email in the chat, yeah. But just write the keywords down as we're going along so that you can email those over to me and get the credit.
And does that come in a form like a certificate, or how do we get that in to get credit for it?
So Shauna will bank it. So
Okay.
you'll send the emails, I'll send her a list of people who need to be banked. You've already put in your number when you registered,
Right.
your real estate number.
Okay.
So we'll get
Thank
that
you.
banked for you.
Perfect.
Yep.
I usually will bank them within 24 to 48 hours. So thank you guys so much for coming. I really appreciate you spending a couple hours here. Sometimes I'll end early. I do like questions. If you guys have questions, raise your hand or put it in the chat, and Edith will let me know if I miss it. But so my name is Shauna. I am the owner of Bolt Credit Services. I've actually been fixing credit for over 20 years. I have a location in Salt Lake City. I also have a location here in Texas, in Pearland actually, but I'm actually looking to move that office where I am, because I actually am in the Woodlands area. I don't know if you guys know where that is, but it's a little bit north of Houston. And so, but a little bit about me before I get started is back in the day when I was starting credit repair, I actually was working in banking. So I used to work for Morgan Stanley on a asset-based credit team when I was only like 19 or something. And then after that, I actually moved to Discover Card. And at Discover Card, I worked there for about 6 or 7 years. And I worked in many departments like disputes, chargebacks, acquisitions was my last department where I was approving and denying credit. I was cutting people's limits down. I was closing accounts due to inactivity. So all the things that people complain about now, I was doing those things. And so I was kind of learning everything about the banking industry back then. And after that, I underwrote auto loans for a little bit. And then I had my own credit repair business after that. So I've been in underwriting and banking. And, you know, I did have to start my whole life over before when the market crashed. So I actually relate to my clients. I understand. I have filed a bankruptcy back when the market crashed, when, you know, Countrywide wouldn't do short sales and they wouldn't do a lot of stuff that they do now. And so I actually had to start my whole life over, live on an air mattress, and start all over again. So when it comes to credit and life events, I definitely understand. And that's why I definitely think that everything that I've been through and all my experiences helps to bring my clients through and help them feel at ease with me. So before I get started in the class, I do want you guys to know, I don't know if you've worked with Edyn before, but she is amazing. And what I love about her, besides her follow-up and how amazing she is with my clients, is that she can close a loan very quickly. So if you need something to get done, they can definitely take care of it over there. She's amazing with her clients though. And if they don't qualify for credit reasons, if she can't help them, like she said, she gets them to us. And our programs are specific to mortgage, and I'll answer some of those questions later. But please keep her in your phone as a top priority there. So let's get going here. Can everybody see my screen just fine? All right, so as I was talking about a little bit about myself when I was working in banking, and how I even got into credit repair when I was working in banking, because I was going to Weber State to do video editing. I wanted to do movie trailers actually. And I started to date someone who was doing credit repair, and I thought it was interesting. So I started testing it while I worked at the bank. I started testing it on myself, my family, my friends. I started fixing people's credit, and I started doing a lot of education and studying all the laws. So any of the laws that are updated, anything that changes, I'm on top of it, and I'm trying to make sure that we're getting our clients the best education and information that is out there. But the reason that people have credit issues is because they have a life event, usually. Not just because they choose not to pay their bills, although there are a couple of those people out there, but usually it's because something happened. Something happened. Most people don't just choose not to pay their bills. It doesn't feel good to be in collections. It doesn't feel good to have creditors calling you. It makes you kind of depressed. I mean, people go through, you know, if you're going through financial struggles, it could affect your whole life, and it's very stressful. And usually once people come out of their life event, they don't know how to rebuild their credit afterwards. So they try to do certain things and it doesn't work. They try to build credit and they get denied. And that's because if you have low scores, you can't just go wherever you want. You can only do certain things to build credit, which I'm going to go over with you guys. But people just get kind of hopeless and frustrated because credit is not taught anywhere. It's not even taught in banking. They never taught me when I was working at any of the banking financial institutions credit. They said, here's our system, here's our what you can and can't do. Good luck, you know. So it's not taught where you think it's taught. So nobody really knows what to do, and credit doesn't make sense. So then people just get frustrated. But once you go through a life event, once that life event is coming to an end, or you're trying to come out of it, because sometimes it takes longer than others depending on what you have, the options to build credit are kind of limited, but it is possible to rebuild and move forward even after a life event. And I definitely know, because I've been through my own recently. I relocated to Texas for cancer treatment for my husband. Unfortunately, he did not make it. Recently, he passed away. And so I have another life event that I had to go through, and I'm so grateful that God kept me and my businesses, and I didn't have to get to the point where previously where I was in financial hardship. I was able to keep my businesses going and still go through these hardships. And I definitely know how it is, and it is not easy. So, but let's get going here. So regarding credit, the FICO score is what matters. The FICO finance score, that is what the lenders are pulling. That is what the banks pull. That's what your clients are getting to be able to move forward on their mortgage loan. Not Vantage scores, which are the scores that they're looking at themselves on consumer credit pull sites. So I want you guys to know that those are two different credit scores, and I'm going to go over each one of them a little bit today. So the FICO score goes from 350 to 850, and that's what the banks will pull. The Vantage scores are different. That's why if you pull your credit on Credit Karma, or your clients are saying, hey, my Equifax says this, you know, but the lender pulled this, and it's because they're two different credit reports and algorithms. So there are 5 components to the FICO scoring model, and I'm going to go over that with you today also. And then also 90% of financial institutions will not help people build credit if their scores are below a 620. So if people are out there trying to build credit, get credit cards or whatnot, when they have scores in the 580s, 500s, because they just want to rebuild, there's only a few options where you can do that. You can't go apply for an American Express if you have a 550 credit score. So the options are limited, but it is possible to rebuild. You can always rebuild your credit no matter what life event you have been through. So this is kind of some areas that Edith will kind of go over, because I want to talk about credit score requirements. So no matter what type of financing you are trying to get, or your clients, or whoever is trying to obtain, there is a credit score requirement, which you guys know. Auto loans, all banking institutions have a score requirement. I mean, Discover Card score requirement was a 660. Amex really won't even approve anyone if you're below a 680. So if you come in at, even if your credit isn't bad, you just have, you know, maxed out cards and your score doesn't meet the requirement, you could be denied. So just keep that in mind. And you guys do know that the loans, the mortgage loans, they all have a score requirement. Some lenders can go down to a 580. Some claim they can go down to a 500. It really depends on the loan program as well, because every 20 points higher that your credit score is, the more loan programs you have available to you. So the 20 points is pretty significant. If you have someone at a 638, you definitely want to get them to the 640 so that they can get the next interest rate, the next program that's available to them, and it's in all aspects, because I used to underwrite auto loans, and for every 20 points higher someone's credit score was, they would get 1% better interest rate. And it's kind of the same for, well, maybe not 1% for, it really depends on the loan program that you're doing for mortgage,
Yeah,
right?
1%'s high for us, right? Like to get lower, but it really does
Yeah.
make a big difference fast. So 20
It
points
makes
can make a
a-
big difference.
A pretty big difference. So FHA, anybody, even if someone's a 800 credit score, they can do an FHA loan. But then the FHA, did they just adjust the credit score? I saw something go online that FHA lowered their limit, their credit score requirement. Is that true?
Say that again, sorry.
That FHA lowered their credit score requirement
So
to,
I can't do this under 600.
oh,
Sometimes you
okay.
can do a manual underwrite, but I have to have it run on my digital underwrite system to be able to do it. And so I haven't been able to get it to run when they have a credit score under 600.
Okay. So will conventional, if someone has a conventional loan, usually your clients need a 680 or higher credit score unless they have a very large down payment, then the lender will usually let them know what their credit score could be at if they qualify for conventional. VA and USDA have their own score requirements, which usually start at about 620. So the same with auto loans, the same with regular loans. When you go into your bank, every 20 points higher your credit score, the more loan programs, better interest rates that you get. You get all these options available to you. So if your clients can get a few more points, your loan officer should be helping them get there. And that's something amazing that Edith does, or Edyn does, excuse me. Okay, credit reports and scores. So this is kind of where I wanted to talk about the FICO versus Vantage and the types of reports that are out there. So I don't think many people know that there are many credit reports and scores out there. Most just think, oh, my credit's getting pulled and this is what it is. And that's not the case. So depending on who's pulling your credit, what type of loans, what type of financing that they do, what you're trying to obtain from them, whether it's insurance or whether it's financing itself. If you're getting your credit pulled for a property management company, or let's say Geico or someone like that, they're going to be pulling a Vantage score, which is the same type of score that you as a consumer can pull on Credit-Karma and such, because Geico and your cell phone company or any of those places off the side that don't lend money are pulling your credit. They're pulling a consumer type report because they do not lend money. So only people who lend money can pull a finance credit report. So, and the algorithms sometimes are different too. So the auto dealerships, they can pull your credit score, but it's a auto score, which is different from like your mortgage, credit card, and a bank credit score. The auto scores are based on your previous auto loans that you may have had. So if you have auto loans and you've even had 1 or 2 lates on them, your auto score is probably significantly affected. If you've had auto loans and they have been perfect, never late, your auto score is probably amazing. So my auto score is way up in the 800s. And that's because I've never had any issues with my auto loans ever. However, my mortgage and my finance credit score right now is about a 750. So my auto score is quite a lot higher than my regular score is. But my Vantage score that Credit-Karma pulls on me is a 611, and I'm a 750 mortgage report right now, or finance report. So the auto scores, if someone tells me that they got their credit score, like if they say, oh, my score is a 630, and I say, where did you get that from? And they tell me that the car dealership pulled it. I don't really pay too much attention to that, because that score that's a different score than a bank or a mortgage company would pull. So usually I would want to see a credit report that a lender pulled or a bank pulled, or my FICO report, which I'm going to go over that on the next slide. Let's actually do a secret word really quick. The first word is going to be score.
So for those of you who weren't on right at the beginning, Shauna's going to give 5 keywords. So just write those down for right now. And then at the end, you can email them to me.
Yeah, and it might be echoey, guys, because my office has no power, so I had to do my class in my loft today, so I'm sorry about that if it is. So then there's the mortgage pulls, credit card, and bank credit reports. So your mortgage, if a mortgage lender pulls your credit or someone at your bank, let's say you go to Mountain America Credit Union or, Chase, those scores are going to be all very close to each other. So if someone tells me Chase pulled their credit at a 660, then that's a finance score. That's probably going to be pretty close to what Edyn is going to pull. And so those are the scores that matter. If someone tells me that they got their credit report there, there's also new FICO algorithm updates. So they update the FICO algorithm often. Well, not often, I guess every few years or so. Right now they're on FICO 10, which is not being technically used right now because there's always like a delay in the FICO algorithm. So most banks will pull a FICO 8. If you were to go to your bank and they pull your credit on Equifax, it will tell you probably that they pulled it on a FICO 8 algorithm. So most of the credit unions and banks around Utah, Salt Lake County are pulling a FICO 8 or sometimes a FICO 2. And that's why the scores vary, is because of the FICO algorithm, depending on when it was updated last, and also what type of credit report that you're pulling. And it's very frustrating because they are all different. All of them are different. And so it is pretty frustrating there. Sorry. So my screen is, I'm looking back and forth at my screen here. Did anybody have any questions?
Lessa just said that she'd heard that the loans like autos disappear when they're paid off. So I still see them on credit, but they just show paid off.
Yeah, they'll close and then after 7 to 7.5 years, that is when items fall off of your credit report usually. So once they close, they will stay on there, but you lose that open trade line once you pay it off. So the variations in credit scores, this is kind of what I was already talking about with the Vantage scores, the FICO scores. Usually if someone's pulling their credit on Credit Karma annual credit report, Experian Equifax, Credit Sesame, we partner with Identity IQ. Even though we partner with them and we send people to these sites like Credit Karma and stuff, those scores are not the same scores that the banks will pull. They just aren't. And it's hard to get people to change their mind. Like it's hard to change people's minds that once they see that score on Credit Karma, they believe it like it's Zillow. And unfortunately, it's just not. And they vary so much. Like it varies anywhere from 20 points to 250 point difference I've seen. Right now, sometimes my scores show me in the 560s, 564s, 569s a lot. But right now they're showing like 612, 611 on my Credit Karma, on my Credit Sesame, and on my, if I just have my Experian app that I don't pay for, that one shows me the same in the low 600s. But really, I'm like, I might even be above a 750 right now because my last lender report that I had pulled, I was a 750, but I've been able to pay off quite a bit of my debt. So my credit is very high right now, but my Credit Karma still shows me that I'm not even a 620. And so when you guys are talking to people, that's why I love teaching this class to realtors, because there's so many people out there that want to sell their house. So it's not even just buyers that have credit issues. It is the sellers. It's people who want to list their house, that have owned their house for 10 years and they've had a life event since then. So their credit stinks, but they can't buy a new house. So they want to get out of their current house, but they can't because they can't buy a new house. So you want to have an option or a way to be able to help those kind of people and give them some education and let them know, hey, it's not the end of the world. Credit is not, it's not like your life is ruined like people think because of credit. If you know how to move about and come out of it, it is very easy to get your scores up fairly quickly. And the key is listening and following instruction. But there are so many people out there. I mean, I can't tell you the amount of people that I've helped over my credit experience that thought that they had no hope, or they thought their credit was, you know, a 580 and the lender pulled their credit and they're a 670 because they were looking at Credit Karma the whole time, thinking that they can't buy a house when really they can. It's a lie out there, all the stuff that people are looking at and believing. And even though Credit Karma and all these sites do mention and they do say that they are Vantage scores, I feel like they should have to disclose that they are not the same scores as a bank will pull, because they make it seem like, no, this is your credit score. And here's all the banks we partner with. And here's all the people we sell your information to, because that's what they're doing, is selling all your information. But it is a Vantage score, and it was created. Those scores were created by the credit bureaus because the credit bureaus own all these sites. The credit bureaus own Credit Karma, Credit Sesame, Annual Credit Report. They own it all. And just because you go to TransUnion and get your credit scored doesn't mean they're giving you your actual finance score. They are giving you the Vantage score, even if you pay them. And we test them all. I have so many that I pay for. And the ones that actually give you somewhat close credit scores are myfico.com. So if you ever want to check and not have your credit pulled, you'll have to pay, because you have to pay for accurate and more accurate information. You will not get it for free. So pay MyFICO like $70 for a tri-merge report, or you could do a, you know, the monthly reoccurring monitoring. So that one will show you all your credit scores. It will show you your auto score, your FICO 2, 3, 4, 5, 6, 7, your mortgage score, everything. The mortgage score we test a lot. Sometimes it's dead on to a mortgage report that a lender pulls, and sometimes it's off by 20 to 40 points, but it's still closer than the Vantage score. And let's see if I'm missing anything else on here. Oh, the other one, the Experian app. So the Experian app that you pay $10 for, it's only Experian. That's the only one I do. I don't do the one where I get all 3 bureaus. I only pay for Experian, the $10 app one on my phone. If I go to any bank or credit union and I apply for something and I ask them what my credit score was, and they tell me, because it's usually Experian is who they pull from. That's the other thing about getting credit pulled that your clients and consumers don't know, is when you get your credit pulled, they're not pulling on all 3 bureaus every time and giving you an inquiry on all 3 bureaus. Banks pull from one bureau, and it's usually always Experian. Some smaller credit unions will pull from Equifax, but usually it's Experian. So if you go to the bank, you have them pull your credit for whatever, you ask them and they'll tell you, oh, it was a 670. If you go to your Experian app, update it, it will tell you the same thing usually, because most banks pull a FICO 8. And so, but they only pull Experian. So the other bureaus, you don't really know what those are going to be, but truly the Experian that you pay for and MyFICO and the lender reports is really all I trust in regards to credit scores. So if you have clients that you want to get them over to a lender because you want to see if they qualify, but they say they don't want to get their credit pulled, let them know that inquiries are the least of their worries. Inquiries are only 10% of their score, and you can actually have about 3 or 4 inquiries per bureau per year before they affect you 1 to 2 points apiece. Inquiries do not affect you 30 points like people think, that they kill their credit score. It's not like that. And even if a mortgage lender pulls credit, usually it just shows an inquiry on 1 bureau, even though they pull all 3. So Capital One and American Express do pull on all 3 bureaus. So if you get pulled from them, you'll probably see an inquiry on all of those bureaus. But if you are talking to clients and they say they want to buy a house or they have a house to sell, but they need to take care of a couple things, usually the reason they're not buying or selling is probably either income or job, of course, because it's income or credit. That's what you need to buy a house. So if not buying, then it's reasons. And if credit is one of them, it could just be because they are not but if you're there to help them and say, hey, where'd you get that? Why aren't you moving forward? Well, my credit score is only this. Get your score from Credit Karma. Guess what? Usually your scores that if it's lower on Credit Karma, it's higher on the lender report. And if it's high on Credit Karma, it's lower on the lender report. So then people get mad also. They'll say, my Credit Karma is a 760. And then we pull their credit and it's a 620, like how mine is right now. Mine, it shows me 620 on my credit card. Oh, mine's vice versa. Mine shows 620, but I'm really a 7. But sometimes Credit Karma will show that it's high and it's actually lower. And so, but if they say it's low, I would say, you know what, let's get you to a lender, because I bet you it's higher, because those are Vantage scores and the lender is going to pull an accurate score for you and be able to qualify you. And they do the analyzer that will help get their scores up even a few points, and they can move forward, and they thought that they didn't even have a chance. Okay, so I did add on here a little bit about reading a credit report. And sometimes people know how to read a credit report, sometimes they don't, but credit reports have all the same information on them. Okay, they will have the date the account was opened, the date the account reported, the date the account, the last update, the payment activity date. So when you're looking at dates on the credit report, I want you guys to know the most important date that affect your credit score if you mess with it is the date of last activity, DLA, on this credit report. And I don't think you guys can see me like pointing at it here, but the DLA date is a very important date. That date is the date of your last payment for a consumer. And that is what starts the different statutes of limitation. So there's a credit reporting statute and there's a debt statute. So credit and debt are two separate things, and people affiliate credit and debt to be together. If it's on my credit report, I owe it. If it's not on my credit report, I don't owe it. If it's past this statute, I don't owe it. And that's not the case. If something is on your credit report, if it goes onto your credit report, it will be on there for 7 to 7.5 years. That is the credit reporting statute. And the credit reporting statute starts on your date of last activity date, the same as your debt statute. So if someone owes a debt, the minute you start to go past due on the debt, which is your date of last activity on the credit report, the date of your last payment, that's when the statute starts for debt as well. So the minute you stop paying a debt, the statute starts. The only thing that restarts that statute is you making a payment. That DLA date should never change unless you've made a payment, not a collection company either buying the debt. It has to be the consumer. So on the credit report, it will show you your score. It will usually have a key at the top that will show you what stuff will mean down below it, depending on the credit report that you're looking at. But they will all have the same information with the account number, if there's lates. The reported date is the last time the creditor reported to the bureaus, and that date's important and it can mess with your credit, but the most important one is that DLA date and the date it opened, because the longer your accounts are open, the higher your scores can be. The longevity of your accounts is the key to having high credit scores. I'm going to give you guys another word. It's bureau. So we're sending these 5 secret words to Edyn at the end of the class to be able to get your credit. And it's going to be bureau. Bureau is the second word.
And you have to have 4 out of the 5. So if you miss one, that's okay.
Okay.
Just don't miss 2.
And so also another thing, when it comes to accounts and credit, if you are past due, if any account you have, a loan, credit card, student loan, mortgage, goes past due, once it gets to 180 days, the account will charge off as bad debt. So basically they'll close it sometimes in between there, but at 180 days, it'll charge it off to the loan comes due. So we all know about due on clauses in contracts. The due on clause means this loan, you owe it all now. There's no making monthly payments on your car anymore because you voluntary repoed it, which sometimes people think if they voluntary repoed it, I don't know it anymore. They should just cancel out that debt. And that's not how it works. If you give the car back or they come take that car, you owe the deficient, whatever they sell it at auction, just like foreclosure, you owe the deficiency balance on. And they can come after you for the statute time frame on that. But items will charge off at 6 months. But I do like to teach people a secret trick. If you go through a hardship and you go past due on things, as long as you can catch it before it charges off, they will fix your account one time under hardship. All banks offer a hardship program. They do not offer it to you unless you ask for it. They will, even if you're in a hardship, they'll make you pay that huge minimum payment that you have. They are such jerks. So I'm giving you guys gold here right now, okay? If you're even 30, 40, 60, 90, 120 days and you're thinking about just letting, some people will just let their accounts go. Oh, I'm letting them go. I can't catch this minimum payment up. These programs will change your minimum payment. It will fix your account. So you just call them. They'll tell you, oh, you owe us all this, whatever they're telling you, who cares? Just wait till they're done and then say, I can't pay this. Do you have a hardship or a re-age program? They'll look, if you've done it, you can only do it once in the life of the account, so you can't keep doing it. But they'll change your account and they will bring it current. So if you qualify, let's say your minimum payment that you owed was $700 because you're 3 or 4 months behind, you have all these over limit fees. They'll say, okay, if you can pay us $50 today and $50 next month by this date, we'll adjust all your late fees, your over limit fees, bring your account current, and they will fix lates on credit a lot of times. You have to make them do that. Like Discover Card will, and some of them will automatically as part of that program, but make them remove the lates because it's fixing the whole account. That's why it's called a re-age program. Most all of them have it. They'll call it a re-age because it re-ages the account and fixes it. And then you just stay current from there forward and you work on it. And if you have several accounts that are past due, you can do that on all of them. But the key is they're helping you bring your account current. So you do want to keep it current and move forward from there. But the banks do have options to help you as long as it's not charged off. And it can't be like at collection and stuff. It has to be with the original creditor. But you can always settle debts as well. Some people will let accounts charge off. Let's see, this credit report I have on here doesn't have a charge off, but delinquent 120 days. So they're probably going to have the Citibank down at the bottom charge off. Well, they probably did have it charge off. So once it charges off, well, the statute on city cards is 6 years. So once it charges off, I mean, they're going to try to collect. Never ever make like a $50 a month payment on an account like this. If you have any bank charge offs or any collections, don't make small payments on negative debt. You keep that account updating the more you do it. And guess what? It updates that DLA date that I told you is very important. That's what keeps your credit low. If you're trying to do the right thing, you're trying to pay a $5,000 city charge off, $50 a month. For one, you won't ever pay that account off. And I'm telling you the truth, because if you have a good account with a $2,000 limit and you pay the minimum payment every month, it will take 7 years to pay it off. So if you're paying $50 a month on a charged off account that's accruing interest all the time, you will never pay that account off. So do not make small payments on negative debt. You settle it and zero it out as soon as you can. Settling it does not make the account more negative than it already is. Some creditors will try to make you think that, oh, if you settle it, it will show settled on credit. It's already charged off. To me, settled means you paid it. And that's how it shows on credit. It zeroes it out settled, zero, done. So if you or someone you know has charge off accounts or accounts that they're making small payments, stop. Call them, try to settle that, is zero it out. Even if you don't have the money to settle it, they don't need to know. You could call, if this was your city card, you could call them and offer them. I usually tell people to offer 20%. When I settle large debts, which I do settle large judgments only, is the only debts I settle now. But I offer 20% or even less, depending on how large it is, to start, because you want to meet in the middle at about 30%. So you never want to start at like 50% because you're only going to go up in your settlement agreement. What's the definition of charge off? A charge off means it charged off to collection. It charged off as bad debt. So they'll charge it off to their collection department. That doesn't mean that you don't owe it though. Some people affiliate a charge off as, oh, they charged it off to somewhere. I don't know where, but no, it's charged off to collection to accrue more fees for them to come after you. So the negative accounts, even if you have a negative collection, try to call and settle it. On these charge-offs, banks will always settle. You, like most places, always will settle. You just have to try a few times. Like if I call today, they're not going to say, sure, we'll take 20%. No problem, Shauna. No, they're going to say, no, we can do 80%. And then I'm going to say, no, maybe 25% offer that. And the person on the phone is only going to be able to do a certain amount. They can never go below a certain threshold unless a manager approves it. So usually when you're settling, you might have to call them a couple of times. But then once you settle, so let's say you had this city card and it charged off at $5,000. They agree to settle for $1,500. Awesome. What if you don't have 1,500? That's okay. They don't need to know that. You settle it down. When they say, okay, 1,500, that's as low as we're going to go. Then you say, okay, can I pay you $200 today? And you split that settled amount into payments, like split it into payments and zero it out. Don't make small payments on large debt. Try to zero it out. Unless it's old. If you have stuff that's older than 5, 6, 7 years, don't pay it because it's past the statute of limitation on debt. And I'm going to go over that also. Do they always close the account when you settle? Well, it's already closed if you settled it. If it was charged off, the account was closed. Some people will try to settle their good open accounts, like if they have a lot of debts. I get a lot of calls on this. They are just all this credit card debt, but they're still in good standing. What if I try to settle those accounts? If you settle a good standing account, let's say even for 70% that they take, it will change it to like a charged off settled account. So it'll make the account negative. It won't be like, oh, this was a positive paid account. It will change it to a negative status and drop credit scores. So I usually tell people don't settle good open lines of credit unless they're negative. If they've already been negative, let's say you're 4 months past due or something, and you want to see if they'll settle, you can, but usually they won't do good settlements unless it's charged off. If it's open or in, not even to the 6 months charged off, like the most that I've been able to try to get people to 90%. So you have to let it charge off and go a little bit past due, even further than that, to get settlement sometimes. And also another thing, don't go through debt consolidation companies unless you really want to, but this is what they do, because I just got asked this twice last week by someone who wanted to do consumer credit counseling or debt counseling. Either way, it's the same thing. And it's usually an attorney's office that you pay X amount a month, let's say $500 a month. And you don't they basically go and settle all your debts later. So basically all the accounts that you included in this credit counseling or debt consolidation, they have you pay them X amount every month for 3 to 5 years. So it's like a bankruptcy almost, because you make a payment into them and at 3 to 5 years, they settle those debts. So you're living with bad credit charged off debt the whole time. Making them a payment, you can't build credit or anything. They stop the creditors from calling you, but you could have settled all those debts one at a time yourself without paying that company all that money to hold your money to then turn around and settle them 3 years later. So those companies I don't recommend because they're just doing something you could literally do yourself unless you don't have the self-control. Like I probably wouldn't. I have, let me just use a little bit of it. And then all your, let's see. Okay, no other questions here, right? Okay. Okay, so this, Edyn, I don't think I've used this new PowerPoint with you. So you're hearing new stuff too that I wasn't talking about before about date of last activity and all that I added. So that is
Yes,
really
that's
good
true.
information. So your credit score is 5 components. 35% of your credit score is your payment history. So late collections, judgments, and good payments. Negative stuff that we're working on affects you 35% of your score. The older something is, the less effect it has on your credit score. It's negative. To your credit score. It could be even more if your score is higher. You know, if you're in the 7s and you get one late, it will affect you like 100 points. So just try to make sure you're on time. Utilities don't show to credit. If someone's late on their car loan, if your payment was due on the 15th and you miss it, you'll get a late fee after 10 days, but it won't show late on your credit till the following month on the 15th after the 5th. Well, actually you'd want to pay it probably 5 days before the 15th to avoid a 30-day late on your credit. Utilization, which is your balances. So the higher your balances on your accounts, the lower the score. The lower the balance, the higher your score. So if you have maxed out cards, and it doesn't matter if the limit's $10,000 or $100. If it's maxed, it affects you the same amount of points. So if you guys have clients that have, you know, $10,000 limit card that's maxed to 5,000 and 3 $500 limit cards that are maxed, I'm going to have them pay down the $500 limit cards. And they could leave the other 2 high limits if they don't have the money to pay those down, because the small ones will keep more money in their pocket, and it will give them the same amount of points as if they use the large money and paid down a large account. If you don't have money to be able to pay down your balance, we'll have people go increase their limit without pulling credit, because the credit card companies can usually just click a button. Never give them an amount to increase it to. If you have 5,000 and you want to increase your limit to 8 or 10,000, don't tell them that. Just say, hey, what can you increase my limit to? And whatever their system will do right then will do. But if you give them an amount, if it can't do it, it won't give you any. But if let's say they change the limit and up it, that will change the utilization of their balance. And everything takes time to show on credit. If you pay something today, it will not reflect today. It takes 1 to 3 weeks from the date the creditor updates to the bureaus for it to reflect on credit. So if you made your payment, let's say you paid off your credit card today, and they don't update till the 25th to the credit bureaus. Whatever your balance is on the 25th is what your credit report will show. So if you pay your balance off in full every single month, that's amazing, but you probably have a maxed out card every time you look at your credit report. And that's just because your due date and the cycle date are different days. So if you always use your credit card and you always want to have a 0 balance or a low balance on credit, you need to call your creditor and ask what day they report to the credit bureaus, because that is the day that you want to make sure that you have your balance paid down. Because your due date is, I mean, if your due date's the 15th and they don't update to the bureaus till the 28th, and you've maxed out your card again by the 28th, then your card will show maxed. So it's all about timing with everything. So I mean, if you know when they update to the bureaus, then you can always have a zero balance on credit pretty much and still use your card every single month, all the time for everything. You always want 3 open lines of credit at all times. With 3 open lines of credit, you can have a 700 credit score or higher, provided that you don't have, you know, lates or maxed out cards and things that will drop your credit score. But you have to have open lines of credit to have a good credit score. And if you only have 1 open line of credit, your score can only be so high. You have to have a couple lines of credit. The longer they're open, the higher your score will be. The shorter your credit history, the lower your score will be. If you had a bunch of student loans, like 5 or 10 of them, and you paid them all off, and now you only have 2 credit cards that are 2 years old, your score is definitely going to be affected significantly when those update paid off and they go away. Well, not go away. Well, the open line of credit won't show anymore. So you just have to be careful when it comes to your lines of credit, because that length of credit history is like the most important thing. That's what get how you get to an 800 credit score, is having your accounts open for 3 to 5 years or longer. With the open lines of credit, so usually 3 open lines of credit. If someone has no credit score, it takes 6 months to get a score, because that's how long it takes for a brand new line of credit to help you. So if you go open up 2 lines of credit today, it's not going to benefit you today. It will take 6 months. Credit has to grow history to be able to benefit you. So at 6 months, you'll get a credit score if you had none. At about 6 months, you'll have an increase of about 20 points or so increase in your credit score from a new line of credit that you opened up. And the longer you keep that account open, the better your credit will be. The only other way to get someone a credit score sooner than 6 months is being added to someone else's credit card as an authorized user. If you piggyback on an existing credit card and it's been open for a while and the bank reports authorized users, it will give a score in 1 to 3 weeks from the date the creditor updates. Let's see. Yeah, it is like punishing you for staying on top of your finances. People get upset because closing an account hurts them and stuff. And the thing is, you don't have to be in debt to have good credit. So people do affiliate credit with debt. I don't want to be in debt. And you don't have to be. You can actually have maybe 3 credit cards if you want, because they always stay open unless you don't use them for a long time, then they'll close them. But if you have 3 credit cards, let's say a bank credit card, a Nordstrom or a store account, let's say 3 revolving lines of credit, and you use them once a year for $40 only, and you have them open forever, you will have a very, very high credit score. You have to use them once a year at least. After a year, your creditors can go through and close your credit cards due to inactivity. And when I would do that, we would just start going through random accounts that have been inactive for over a year and just start closing them or cutting down their limits. But you can call and reopen them and stuff too. But really, you don't have to be in debt. You can just have a couple cards that maybe you use for Christmas. Maybe you use your Target card and a couple of these credit cards, and you put all your Christmas on that, and then you pay it off. And that's the stuff on your credit. I mean, you don't have to be crazy on your credit. You don't have to have all these loans with high payments and be in debt. You definitely do not have to do that.
Shauna, that's a good question. She's asking about if you're piggybacking for credit, should you do more than 1 account? I've always done one, but
a couple of them, I've had people do like a lot of them, and really it only helps you if there's a couple. So if you do way more than that, it's not going to be worth it. But 2 of them, if they can't have lates, unless you're just trying to get a credit score. Like when I added my son when he turned 18, I added him to a maxed out card, when normally I wouldn't have people get added to a maxed card, but he was just trying to get a credit score. So it did give him a 678 credit score by being added to a maxed out card I had open for 4 years. Now, if someone has no scores and they get added to a card with a low balance and it's been open 5 years or longer, it gives them a 740 credit score or higher within 1 to 3 weeks. If someone, let's say Edyn had someone that had some credit stuff on their credit report, but they were only 25 points away from qualifying, and all they wanted to do was the authorized user option. If people have collections on their credit report that are updating every month, the authorized user option will not work because the negative items override. Like, you can't have negative items updating every month and think that you're going to get a good increase from an authorized user account. So if someone wants to use one of our authorized user accounts, we have to make sure that they don't have any collections updating, any negative, anything that could drop your scores. We don't want that to happen, because if there's nothing negative on your credit and you already have a credit score and you get added as an authorized user, it could give you 20 to 40 points in 1 to 3 weeks sometimes, depending on how long that card has been opened. Now, credit unions and bank branches do not report authorized users, except Chase and Wells Fargo. Amex, Capital One, and Discover are the best cards to do authorized users on. And those other bank cards, those do help you. You can have them at 0 and hardly ever use them. But you do want to use them once in a while, even if it's for 10 bucks. Yes, what question do you have?
So I added my son to a credit card and they asked for his social security. And then I added my daughter to another one and they didn't ask for hers. Will they both still start getting a credit, or is it only if you add their social security number?
You'd probably need the social security number. So some department stores and other places, they'll only get a name to give them a card for authorized user, but it won't show on credit unless they get a date of birth usually and a social. If they only get a date of birth and they live in the same vicinity as you, then it could still show up on their credit, but it may not. But if they get their social and everything, it will always show up.
Okay, so how do I know if it is getting on their credit? Would I just have to see if I could pull a credit score for them?
Yeah, usually I'll have people do Credit Karma for the 2 bureaus and an Experian, or you can pay for Identity IQ or something. But if they just want it for free, have them download Credit Karma and see if that account shows up on there.
Okay, thanks.
If you want to see if you have any collections, you can always look on the consumer reports. The reports you can monitor yourself. Just don't pay attention to the scores on there, because the scores are Vantage scores. But if you want to see if you have any collections reporting to credit, if you look on any consumer report, there should be a spot where there's a place for collections, and it would show you there. And collections sometimes take a while to show on the credit report, but just so you guys know, before a collection company can put anything on your credit, they have to send you a notice first, what's called a third right to dispute notice. And a 30-day right to dispute, excuse me. A 30-day right to dispute notice, where they send you a notice. It's a paragraph on there. If you ignore that notice, then the next month the collection will show up on your credit report. So don't ignore collections. You can call them and dispute it. You can contact the original creditor and just pay them if you owe it. If you don't owe it, you call them and dispute it. If you just ignore it because you're like, oh, I don't owe that, well, and then it goes on your credit report, then it's more of a fight to get it removed. So if you get something and you know it's invalid, or if you know it's yours, you can call and settle it. That's how you know that, hey, we're going to put this on your credit report next. Medical bills shouldn't show up on credit for at least a year now, because they just changed that law last year. So credit, when it comes to closing an account is the most damaging thing you can do to your credit. And that includes paying off a car, refinancing a loan, a mortgage, trading in a car. Anything you do with a loan, the loan can't be changed. So they would have to close the loan and reopen one. So anytime that a loan and a contract is complete, it's done. So the only way to get past that is to refinance it, which will close the old loan and reopen a new one with no history. So if you just refinanced your car or traded it in after 4 years and you just not lost, but closed that 4-year-old account, your scores will drop 50 points. Closing an account's the worst thing that you can do to credit. And if you close multiple accounts, that's 2 or 3 accounts. Like if someone has a Utah housing, a house they're selling right now, and it's got 2 loans for Utah housing, and that loan's gonna close when they sell their house and they're gonna wait a little bit to buy a new house. Well, remember, those two loans closing are gonna drop scores significantly because they just lost 2 open lines of credit. And credit is based on open lines of credit. So anytime you make a change and you lose open good lines of credit that you had, your scores will be affected negatively unless the account was just opened recently. If it's been open only 3 to 6 months, maybe you won't take a hit, but after that and it started to grow history and you close it, it will drop your scores. And also stay away from short credit history. Like, people will go do short loans at the bank like for 6 months and keep doing them. That will keep your credit score low because you're keeping your credit history 6 months, 6 months. Everything closes at 6 months. So your score will have no time to grow. If you're wondering why your credit score isn't growing much and you're trying to do all this, always look at your length of credit history. So if I'm looking at someone's credit report, I always want to know, how many open lines of credit do they have? What are their balances? Have they been paying on time? And how long have they been open? Because all those things are going to affect their credit score. And if they've closed accounts recently and they're wondering, how long it's going to take to get their scores up, sometimes it'll take a while. So the only way that you can counteract that drop, if you just closed accounts, or if you have clients who closed accounts and they're about to, they're under contract to build a house or whatever they're doing over there, piggybacking as authorized users, bringing down balances and stuff will help increase that credit score up. The only things that drop your score significantly: closing accounts, maxing out cards, getting new negative items. That's it. Not inquiries unless you're going nuts and have pages and pages of them. But closing accounts, maxing out cards, getting new negative items. The next word is credit. That's our next word in our secret words. Credit. Let's see, I have a legal judgment. So if you have a judgment against someone, you can go to the court and you can apply for a writ to garnishment. You can request a writ to garnishment on wages or bank account. You might have to have an attorney to help you do that, but sometimes it's worth it. And if you want, there are collection companies out there. There's local collection companies in Utah actually that you can contact and send that debt to collection, and they'll collect for you. They'll collect the whole thing and add their fee on top of it. So I would definitely do that and maybe try to get a garnishment of some sort. Let's see. Okay, inquiries are only 10% of your score. So people worry about inquiries the most. And inquiries only hurt you for a year. They drop off credit at 2 years. You can have 3 to 4 inquiries per bureau per year before they affect you a few points apiece. If they are the same type of inquiry, a lot of people will ask well, what if I am house shopping or car shopping or whatever, and I get a bunch of inquiries in a short time? Well, if they are done within 30 days and they are the same type of inquiry, which means they're coded the same, because everything is coding on your credit report, and your creditors are code, everything is a code. And so if they're coded mortgage, it will all count as mortgage. If someone goes to Security Home Mortgage and they go to Chase Bank in Mountain America, Security Home Mortgage is the only one coded as a mortgage, and the other ones are just a financial institution. So those won't count as the same type of inquiry. So it really depends for those inquiries, but inquiries are the least of your worries. If you want to get your credit pulled, get your credit pulled. If your clients want to see if they qualify to buy a house, it's fine. It's not the end of the world. So those are like, I don't even understand why people get so worried about those inquiries, especially when their credit's a 505. I'm like, who cares? No, I'm just kidding. And then types of credit is 10%. So you want a variety of credit, which is like a mix of credit, loans, credit cards, things like that. But if you don't have a variety, it's okay. If you want to have 3 revolving small lines of credit with a $100 limit And that's all you want because you don't want to be in debt or even get like, I have a shopping problem. So if I have a limit, I might use it. But if you're like that and you want to keep your limit low so that you don't get in trouble, you can do that too. It doesn't matter what the limits are. What matters is how long have your accounts been open? Are you paying on time? What type of credit do you have? And what are your balances? So that's really the key. You want open lines of credit, open for long periods of time with low balances and good payment history. And just be careful when you close accounts. It's not like you can never close an account or pay off a loan. You just have to time it right. If you know that you want to buy a house or refinance your mortgage in 2 months, don't trade in your car right now. Wait until after you do your refi, and then a couple days after you close, then go make the change to your cars when you don't need your credit for at least 6 months to a year or so. So it's just really all about the timing when you're messing with credit, because it's like everything's on a lag too. So it's like nothing is immediate today reflecting on credit. And so you, as long as you kind of know how long things take, what you can and can't do, and how things affect you, then you should always be able to maintain your credit and have a good credit score. Can you build any credit still paying only the minimum payment? Yeah, you can pay the minimum payments on your credit cards. The more you pay on them though, the sooner you'll pay it down. Just like on a mortgage, if you have a 30-year mortgage and you pay one extra payment a year, you'll pay it off in 22 years. Same with your credit card company. And nowadays, what's pretty cool actually is if you look at your credit card statement, they put on there how long it will take you to pay off that balance if you only make the minimum payment. And now it's like 13 years. When before, when I was in banking and someone had a $2,000 limit card and they only made the minimum payment, it would take 7 years to pay it off. And on 2 of my credit card statements that I saw recently, for a balance that was pretty close to $2,000 at the time on this statement, it would take 13 years. But then it also said, but if you pay this amount, which was not double the minimum payment, was just a little bit less than double, but it said that you could pay it, it would give you a sooner time frame of paying that debt off. So that's pretty, I actually like that they put that on the statements now that I've noticed. But just know that your credit cards, if your balances are at 50% of the limit, they're affecting you about 10 to 12 points. If your balances are close to being maxed out, it's affecting you about 20 to 25 points per card. So once it starts to go above 30%, 25, 30% is when your score starts to drop. So keep that in mind. Any other questions? How about paying half the balance on my car? Yeah, if you do that, it'll help you. Sometimes if people want to buy a house and let's say they want to get rid of their car payment to help their debt to income ratios for the loan with Edyn, and they have money to pay off their car, they can pay it down to where there's 9 months left or less on the car payment. And that will help increase the score. And Edyn wouldn't have to count that payments into the DTI ratios because it's going to be paid off in less than 9 months or whatever. So you can definitely pay down on your loan to help your credit and not even use that payment into, you know, your ratios usually too is cool.
I was just gonna make a comment when you said about adding your children to your account.
Mm-hmm.
So when our children reached high school, we added them as an additional to our account. And they actually inherited all of our credit history. And they
Yes.
each had a credit card in their name, and then they use it. And then when they got to be 18, we put them on our Amex. And Amex actually grandfathers them back to, so their length of credit is from actually when we opened the account. So they have credit as long as we've had credit with Amex on their
So
credit.
their new card that they opened up separate
They
from
didn't open a new one. We added them to our card.
right, which that would buy that history. Mhm.
Yes, and so they actually get not just from when they got the card, they get the history of the whole length of the Amex card itself.
Yeah, that's why it helps so much.
Yeah,
Amazing.
But we did that when they entered high school, and we didn't have any problem getting them on as additional card holders to build their credit during high school. So when they put their gas on it or lunch or whatever, they had a credit card in their name to use. And we didn't have any problem. And they were, so I guess 14 when they hit high school. And they put them on there with their social security cards as us as the main, and then they got all that credit as well.
Yep. And then when they turn 18 and can open their own credit, they already have a 780 credit score
Yep.
or whatever. It's incredible because it does buy that whole history. That's why it's important if someone's just trying to increase their score, that if they're being added to someone's card, that the balance isn't maxed or there's lates, because even if they had lates 2 years ago, it shows now on that person's credit because it puts the whole history on there. But the authorized user option is pretty cool. I mean, it does help people who need it. Like if a spouse needed their wife's income and she doesn't have a credit score, boom, we can get her a credit score from her husband's or whatever. So it's pretty awesome. So now I'm going to get into a couple new things. One is going to be medical debts, which medical is annoying. We all know this. They did change some laws last year in regards to medical bills. So anything under $500 now should never show up on your credit report. Anything that's paid should come off of your credit report if it's on there.
And I've seen that happen, Shauna, which is really cool. So we had somebody have a collection show up and they paid it and it was removed and their credit score went right back up.
Yep.
So I've never seen that before, right? Usually when a collection showed up, if it's medical, right?
Mhm.
But usually when those medical ones show up, then your credit score is just lower. Even if you pay it, they wouldn't
Yep.
remove it before. So that's super awesome.
It is awesome. And they can't show up on credit for at least a year. So they have to give you at least a year to pay that medical bill. You'll get collection hospital notices. The hospital will try to collect first for 6 months, then they'll send it to a collection company usually, but the collection company can't put it on until after a year. But you can settle medical debts all the time. Same thing as if someone has medical bills on their credit report, don't just make small payments, call and try to settle it and zero it out. If you do owe it, because the medical statute in Utah is 6 years, they have 6 years to legally come after you to collect on medical debt or any contracted promissory note debt for that matter. But the other thing about medical is they have amazing hardship programs. Just like I was telling you about the bank, hospitals have it as well, but you have to do it through the hospital or the place that you had service, not through the collection company. So if the debt's already went to collection, don't try to do the hardship option through the collection company. You have to go to the original hospital's billing department. And even if the debts are in collection, it doesn't matter. I still have people go back to the hospital or IHC or whoever, because they have a financial assistance program. You fill out the application. Within 1 to 3 weeks, they tell you if you qualified for hardship, and that could adjust your bill 20 to 100%. And I've done this way back because I've been doing this forever. And I qualified for hardship even now when my husband was sick with stage 4 cancer. I qualified in Utah, even though his business, we had to close. My business, still went. In Utah, I qualified, and in here in Texas, we qualified as well. And thank goodness, because he was in the hospital for months and months. Our bills were millions of dollars. But the hospitals do have amazing programs. If you have any doctor's bills or anybody you know or kids that have medical bills, before I have anybody pay bills, I have them apply for hardship, because even if the debt's 3 years old, who cares? It can't hurt to try, and they will pull debts out of collection. I've seen debts pulled out of collection up to 4 years back for a hardship, and they adjusted their bill and they moved forward. So we always have people do medical hardship. Medical debts in the state of Utah are considered family debt, even though Utah is a separation state. So, but medical bills is family debt. So if you're married and you guys have kids and someone takes the kids to the doctor and doesn't pay the bill, the collection bill can go on both parents. Same with if you divorce and you have kids and the mom takes the kids to the doctor all the time and has the kids or whatever, and then the dad gets a bill for the collection and he's like, I didn't sign this. It doesn't matter if it's other states. There are only 9 states that are community property. Texas is one of them. Community property means all your debts are kind of, if you're married and you guys go apply for things, when you're married, it's all community property. So it's very different in these states, and I'm learning the hard way, just trying to sell my house here actually. Because it's not like Utah with joint tenants. If my husband passed away, I'm on the property. Here, I had to split with each one of his heirs. I get 50, they get 50 split between them. And it doesn't matter where they are. If you talk to them, it doesn't matter. It's nuts. So I've just been learning some crazy stuff over here. Oh, Lord. Okay, so another thing here. So there's other reports that are pulled for people. So most people think, oh, when I go apply for this apartment, or I go to this bank, or I go anywhere I go to get my credit pulled, they're only pulling my credit, or maybe a background if you're getting an apartment. Well, that's not all they're pulling. Just like, you know, your lender isn't just going to pull credit. They'll probably pull a LexisNexis or check your public record report. Your lender is also going to pull a MERS report probably, which is going to show any foreclosures that someone has ever had ever. They will also probably pull a KVERS report, which will show any federal debt that anybody has had anywhere ever. So there's all these other reports that could affect your client's deal, and it's all these background reports that most people don't even know exist. Student loans, if someone has student loans for a long time, let's say someone had the student loan and on the credit report it falls off at 7.5 years, but the student loan went to collection and it just kind of sat there, went to collection, never showed back up on credit. So it's like that debt was gone because a new collection company never showed up on credit. Nobody has ever tried to find me on this debt, let's say, and you go to buy a house and the lender pulls a KVERS report and says, hey, you have $23,000 worth of student loans, federal debt that's not paid. What? It's not on my credit report anywhere. Well, it's still out there. So it's never just going to be gone. There are so many reports out there. And these reports that I have on the screen, the check system, that is what banks will pull. So when you go to the bank, and you want to open a checking savings, they'll pull your credit, they'll pull a check system. And a check system is nationwide. And if you've ever been in one, you're in it for 5 years at least, and then you fall out. A check system means you've had a negative account. Let's say you had a checking account that went in the red zone into the negative and you didn't catch it up, or you had a line of credit that charged off, or something affiliated with the bank account, then you're in that system for a long time. And then when you go to another bank to try to open an account, they'll pull that check system and let you open an account, or they won't. So some people don't even know why they can't open up a bank account sometimes, because the people at the bank don't tell you. They just say, oh, we can't open up an account for you. And that's it. Instead of saying, oh, hey, you're in a check system for this $125 Cypress Credit Union account from 4 years ago. But then if you go pay it and stuff, then usually you're fine. So check systems get pulled, foreclosures, the MERS report is what the lender will pull. Student loans are tricky too, because if you have student loans right now, or if you have kids with student loans, please, please, please do not miss the first payment after a deferment. If your loans are deferred and your payments come out of deferment on July 15th, do not miss that payment. If you do, you'll get 90+ day lates on all the loans for the whole time you were deferred. It's very, very important that you don't miss those student loans. And student loans are so easy to work with. They'll put you in forbearance. They have so many programs, and there are many student loan forgiveness options out there for people. There's income-based student loan forgiveness option that I just had 2 clients get approved for. It's based on your income. It is a 10-year one, but sometimes you don't have a payment. Like one of the clients I referred doesn't have a payment at all, but she has to keep renewing that every year. So every year you have to reapply and renew for that forgiveness. If you don't, you have to restart. But after 10 years, it gets forgiven. And then I have another girl who her payment's only $50 a month. She qualified and it's $50 a month. It is for 10 years, but it does get forgiven. There are forgiveness options for police officers, for teachers, for disabled vets, for veterans in general. There's many. So if you, and it's all done through FedLoans. FedLoans.gov is the site for all the forgiveness options. And then LexisNexis is huge. People don't even understand how big LexisNexis is. LexisNexis is bigger than the credit bureaus, and they sell the most information out of all of them, I think, based on all the research I've done. But LexisNexis buys and sells your information, and LexisNexis is where the government and all the courts and everything report. So they report to LexNex. And so do other companies and stuff too, but they report to LexNex, and then LexNex submits all the information to all the bureaus. And LexisNexis has a lot of inaccurate information on it because the courts have inaccurate information. The reason why judgments and tax liens don't show on credit anymore is because of the courts having such inaccurate information. And you can't even fix stuff in the courts. If you're, let's say they have some stuff in there, like a ticket, even like a speeding ticket or something, who knows? Because LexisNexis shows your whole background, tickets, judgments, liens, it shows everything public record related. If they put in a wrong, spelled your name wrong, if they put in a wrong date of birth or social, that could all be wrong on your credit report. And if someone put in a wrong judgment, it was showing judgments on people that wasn't theirs because the courts don't pay attention. And they also don't fix stuff. If you call them and you're like, hey, you have my date of birth on all these, speeding tickets I got or whatever, wrong, they won't fix it. You have to hire an attorney. And so they're reporting to LexisNexis with all this inaccurate information. And that's why credit reports have inaccurate information as well. Like if you look at your name, spelling, socials, date of birth, addresses, all of those that have inaccurate spelling is because someone who took your application and stuff spelled it wrong. And so people who are doing that are just messing up your credit report. Judgments and liens, like I just said, they don't show up on credit anymore, but they do exist. They will kill deals. They're the ultimate deal killer if someone has a judgment or a tax lien, especially if they haven't been making payments and stuff on it, huh, Edyn? It's like, well, you have to pay that to close, and if you don't have money to close it, to pay it and you're a buyer, then
They just made it so that if you make one payment, then we're okay. It used to be you had to make 3 payments. So from what I'm hearing from Fannie and Freddie, that's what they're telling us. And so we've closed a couple where you just had to make one. You had to get a statement, like a plan set up and make one payment. And so that's a huge deal because usually like there was nothing you could do. Yeah.
That is incredible, actually. I like that way better. Okay. So judgments and tax liens will show in the courts. A lot of lenders these days, if the judgments and liens aren't showing on credit, which the only way they will is if it matches their information exactly, then it will show up on credit. Bankruptcies show up on credit under public record, and that's because the bankruptcy courts require everything to be exactly like it should, and that's why it shows up on your credit. But judgments and liens, we dispute those. If people don't know if they have judgments and liens, sometimes I'll have someone at title or something. If I think they might have a judgment and they're trying to buy a house, I might have my title girl that's a friend of mine pull to see, so that we know that if someone needs to settle it before we send them back to the lender to have credit pulled. So we're not, I like to make sure, what's it called? Be checking all this in advance before I tell the lender to repull credit. If I'm like, hey, if they say they were served or something and I don't see a judgment anywhere, then I'll actually have title check the court docket for me and see if there is a judgment there that someone needs to pay later, so that we're not finding that later.
Which you always want to do, right? In any deal. I'm sure every real estate agent's had a deal where something comes up at the very end. Like, I never want that to happen, right? We want to know everything up front so that we don't have that problem.
Yes.
Because it's always hard at the very end of a deal, like you're saying, to have a tax lien show up or something horrible like that.
Yeah, and if you ever get a tax lien, I mean, we're self-employed. If I ever get something, if tax lien or if something slips through from some year where you're like, I know I paid that, what the heck? And you get a tax lien, just pay it and ask for a withdrawal. A withdrawal, they will send in Utah, it's awesome because they'll fax you, they'll email you a withdrawal, which is a withdrawal means it can be deleted from LexNex, from credit and all of that. A release of the lien is just proof of payment. And I never send in proof of payment to get stuff removed because proof of payment just means you paid it and it will update paid. I want it deleted. So you always want to get, if you want something removed, you want to make sure it says that it can be removed because showing something paid, if something's on credit and stuff, we'll just get it update paid, not removed just because you paid it. Just because you pay something doesn't mean it comes off of credit. Once it's on credit, it is on there for 7 to 7.5 years, unless you dispute it or unless it's medical. And nowadays they come off, they're supposed to come off after being paid, but just paying something does not remove it from credit at all. It just actually gets it to show worse, especially if you just paid a 4-year-old charge off or collection, you just made it brand new by paying it. So when you paid it, it was older and not affecting your credit as bad. And now you paid it and now it made it brand new January 11th, 2024, just because you were paying it. So you have to be very careful messing around with old negative stuff as well. When it comes to bankruptcies, so bankruptcies is not the end of the world. Some people will live forever with bad credit just because they don't want to do a bankruptcy, and nobody wants to do a bankruptcy. Trust me, I've done one and I did not want to do it. I took a long time when the market crashed before I filed my bankruptcy. And that's because I wanted to pay my stuff back. But I mean, I was making 6 figures and all that. I mean, like really good money back then. And when the market crashed, I wasn't making anything again. And I lost my job and everything was going on. And so sometimes you have to file a bankruptcy. Now, a Chapter 11 is for business. That's kind of like a Chapter 13, but for business. A Chapter 13 is where you make too much money to do a Chapter 7, and you're kind of doing a wage earner plan through the trustee, paying your creditors back slowly in a settled arrangement through the trustee, which is over 3 to 5 years, which is kind of like the debt consolidation thing that I said. So sometimes if people want to do it, like they don't qualify for a 7 and they're going to do a 13, if their debt isn't so much, I try to get them not to do a 13 and just settle their own debts one at a time. Because that's basically what the Chapter 13 is doing, is you make a payment to the trustee every month, and then they settle your debts one at a time for you. And then your bankruptcy will dismiss in 3 to 5 years. And you can buy a house in the middle of a bankruptcy 1 year in, usually, if your credit score qualifies, your income qualifies, and you get permission from the trustee. You can buy a house after a year. If you do a Chapter 7, which is relieving you of all of your debts except student loans and some taxes, then you have to wait 2 years to buy a house FHA. And is it 4 years conventional? Sometimes or 7 years? Sometimes
It's
I get
7
them-
conventional if you have a foreclosure, 4 if you don't have a foreclosure.
Oh, okay. So, I mean, it's not the end of the world. Sometimes I recommend bankruptcy to people. If you have so much debt that you will not be able to pay it back, then bankruptcy, and your income and things have changed, which is usually why things have changed in your life, then it's there for a reason. It's there to help you. It's not there to take advantage of, but it is there to help you. And it's actually pretty easy to rebuild after a bankruptcy. If people are just struggling with charge-offs and really don't want to do a bankruptcy, it's kind of odd to me, because it's like, if you don't have the money to settle these and you want to start over and you qualify for a bankruptcy, it would zero out all of your debt and you could move forward. But the key is not being in those same mistakes and, making sure that that won't happen again, obviously. But there are ways out. It is very easy to rebuild credit after a 13 or a 7. You can't really build business credit easily at all when you've had a bankruptcy. If you've had a Chapter 7 within the last 4 or 5 years, it's very hard to build business lines of credit. But other than that, you know, it just takes time to buy a house, but you can rebuild credit fairly quickly after a bankruptcy. And it's not the bankruptcy itself that kills your credit. It's actually all the accounts that update. So when you file a bankruptcy, that's a public record. When that shows up on your credit, it'll ding you just like a negative item would, maybe 30 to 45 points. But all the accounts that you included in the bankruptcy, they all update bankrupt. So if you had 30 accounts, maybe some of them weren't affecting you that much. Maybe they were older, some were recent. All of those get a notice of filing. Bankrupt, July 2024, boom. And it's like you got 30 brand new collections. And that's what kills your credit score. But after that, once they zero out and everything's done, your credit has no place else to go but up. It's just a little bit difficult to get maybe some of the things you want until you build your credit score back up. And then you could move forward, but it's really not the end of the world. And if anybody ever has questions, they can call and we can rebuild. And there's all kinds of stuff you can do after and during a bankruptcy. Let's see, did anybody have questions? Oh yeah, proactive is the word I was looking for. The impact of misspellings on your credit. Sometimes that does affect you a few points, and especially I like when misspellings are attached to accounts I'm trying to remove. So if your name is spelled wrong and it's on some collection or some charge off that you have and we get them to fix it, then it's sometimes easier to fix your credit. So we always fix misspelled names, addresses, socials, date of birth. Sometimes a lot of people have multiple socials on their credit report. Sometimes people have stuff on their credit report that they don't think is theirs. And it's not because someone stole your identity. It's because of a mixed file. So credit is like coding. Like once you get your credit pulled, it's grabbing for information. So if your name is John Smith, and you might have a couple extra socials on your credit report, or if your name is pretty common, you might run into that often where there's accounts on one bureau only that's not yours, or inaccurate names and things like that, but that can all be fixed. That's actually very easy to fix, usually within one round of disputes from us. So if you have any of that, you just let us know. So this right here is the statute of limitation on the collection of debt. So this is really important because this is separate from the credit reporting statute, which we were talking about how long things stay on your credit report. This is how long a creditor has to legally come after you for a debt, which means they have this amount of time to sue you. Just like if you get in a car accident or something, you have 3 years statute to sue for personal injury. Okay, this is how long creditors have to come after you. If this time frame has passed, then you legally do not ever have to pay the debt. So don't let creditors scare you. So the statute of limitation is based on the date that you went past due on an account. It could be verbal, it could be any account. Verbal does count as a statute. So once you went past due, the statute starts. Once 4 or 6 years passes, if you have not made a payment and they haven't filed a lawsuit against you, you legally don't have to pay the debt. Now, if you've made a payment, it'll restart the statute. If they sue you, it stops the statute. So if they filed a lawsuit, it stops it because that's how long they have to actually file the lawsuit. And it's based on the state that you lived in when you incurred the debt. So like Utah is 4 or 6 years. 4 years on oral and open-ended. Open-ended is like a credit card, like a revolving line of credit. However, if you sign a certain type of contract, promissory note with that, it will change it to a 6-year statute. So loans and medical are 6-year statute here as well. And then in Texas is 4 years. Every state is different. California is 4 years, 2 years and 4 years. Some states are like 15 years in the Midwest. Let's see, how do you get the companies that are calling your clients? So if the debt is past the statute and they don't have a judgment, if they sued and they got a judgment, it changes the statute to an 8 to 10 year statute that can be renewed in the court. And these last 2 years, I've seen more judgments renewed than in the whole 25 years of me fixing credit. So these creditors are starting to renew judgments now. But if it's past the statute of limitation, you tell them to stop calling. Tell them it's past the statute and to cease collection. If you get a collection notice for a debt that you know is past the statute of limitation, then you can respond to that collection notice with the debt's past the statute of limitation. Or call that creditor and tell them, or if they call you, you always want to tell them to send you something. The debt's past the statute. If you claim I owe you, you can send me something but in the mail so I could see what you claim I owe you. But no, it's past the statute of limitation. So if they sell the debt to a collection company, that does not restart the statute. They can sell it 10 times if they want, and that doesn't restart it. It's only the consumer making a payment. And if you call them, it doesn't restart anything either. A lot of people will say, oh, if I call them, they're going to start doing something. Well, no, they won't. They can't update that date of last activity date. Calling them does nothing. You could call them and try to settle. If they won't work with you, well, hey, maybe I'll bankrupt you then because I don't have the money. Bye, Felicia. I don't know. Let's do another secret word. Payment. Payment. So if someone sues you, let's say you get a summons, don't ignore a summons, whatever you do. People will be scared of debt. People are scared of the creditors for some reason. I know, I understand it's stressful, but don't be scared of these creditors calling you. If you get served, don't ignore it. If you ignore it, within 20 days, you'll get a default judgment. And now the statute has all changed. But if you get served and you call them and settle it and stuff, that's what you want to do, is prevent a judgment from being entered. If you get served on a debt that's past the statute of limitation, don't ignore that either, because the courts do not know that it's past the statute. It's up to you to defend yourself. That's why you got a summons that says you have 20 days to respond to this notice. So if you get a summons, or if one of our clients gets a summons, we tell them if it's within the statute, they need to call and settle it because it's within the statute. I mean, I can't get rid of debt. It's not like I can wave a magic wand and say, nope, I'll stop this. I'm not an attorney. But if you call and settle it, you can respond to the summons and say this debt was settled, no judgment should be entered. If someone gets served past the statute, we respond to that summons, letting them know this debt's past the statute of limitation and no judgment should be entered. So the statute law is, I mean, if you went to court and told the judge it's past the statute, it's a law to protect consumers from creditors trying to collect for 20 years from now. Even though they will try to collect for 20 years from now sometimes. But if you just tell them or respond to them, usually if someone gets a notice that's past the statute and you respond to it once saying it's past the statute of limitation, they'll cease collection. All right, we're going to talk about business credit and then we'll be done. So you guys are probably all self-employed here. I don't know if some of you use your business credit or even know that it exists or even care about it. Some people don't need it. If you do have a business though, it's good to have your business set up to build its own line of credit or build its own business credit so that if you do need something for your business, you can let your business finance your business and your personal finance your personal. I mean, all the millionaires put everything in their business name. So if that's what you want to do, this is how you can do it. There are a couple different options for business lines of credit. There are vendor trade lines and there are financial trade lines. Vendor trade lines are like your suppliers and stuff like that. I mean, when we did excavation, we had so many vendor accounts with a bunch of our different suppliers. You can get lines of credit through your suppliers and your vendors, and they report business credit. Instead of you having to just go use it on your Home Depot card and do everything, try to open an account with your vendors and they'll report to business credit. So they're just like it says on here, merchant trades, supplier trades, etc. Sometimes they're net 30. But if you pay, and the key to business credit is paying early. So I'm going to go over a couple different business credit reports and how they report, but they all are based on paying early. So when it comes to business credit, it's not like personal credit, paying, what are your balances and what is this? And, how many lines of credit do you have open? It's only based on early payments. So if you pay early, you have a very high business credit score. So have a couple lines of credit. If you use them, pay them 2 weeks early. That's how you have a good business credit score. So sorry, financial trades also are like business lines of credit that we've been talking about that you get from the bank. So those are the two different types of business lines of credit that we'll report. So Dun & Bradstreet is the biggest credit bureau for business. It's worldwide, and their credit score is called the Paydex score. Oh, yeah, that's what I'm talking about right now. Zach is the Duns. So Dun & Bradstreet's huge. All the major banks report to Dun & Bradstreet. To have a Dun & Bradstreet, a Paydex score, which is what their score is called, it goes from 0 to 100. 80 to 100 is good business credit. That's like having 700 plus personal. And you just pay your accounts early. To have a Paydex score through Dun & Bradstreet, you have to have a DUNS number. Oh, yep, and I do have that on here at first. I thought, wait. So your DUNS number is free. If you go to dnb.com, which anytime I set up a business, I always get my EIN from irs.gov. Then I go to dnb.com and I get my DUNS number for that business because it's free and it attaches to your EIN, and then they're attached from there forward. So if you go to dnb.com, hover over, get a free DUNS number, and just follow that. It takes 2 seconds. Okay. If you don't have any business lines of credit right now, that's okay. You can go get your DUNS number anytime, even with no lines of credit. Once you start building a couple lines of credit, it'll take 90 days to get your Paydex score. So it takes about 90 days for your business credit stuff to update. Open up a couple lines of credit, pay them early. Let them sit at 0 even if you want. Get them. When you get an open line of credit, whether it's personal or business, you want to use it, because using it when you first get it, and even if it's for 20 bucks and then paying it early next month and letting it sit there will be genius for you, because you used it, you paid it early, now it's just sitting there. So it's active, it's good to go. You paid early, your credit's killing it right now. So with business credit, I usually like to have people do 2 to 3 open lines of credit in their business name as well. Use them, pay them off early. And your DUNS, you won't ever have a Paydex score if you don't have your DUNS number. So if you've been in business and you have a couple business lines of credit, but you don't have a DUNS number, you may not have a credit score unless someone's pulling credit from like PayNet or something, which is another one that I'm going to talk about here in a second. But you have to have your DUNS number to have a credit score for Paydex. So, and it's free, whether you've been in business forever or you just started a business, I would just go get it. And then the longer you've been in business, the easier it is for you to get better lines of commercial credit for your business as well. The longer you've had your DUNS number, if you've had your DUNS number and it's over at 80, on my internet.
I can hear you again now.
Oh, you can hear me? Okay.
Now, just for a second, we lost you, but
okay. So when it comes to, what was I just going to say?
that you'd always want to get your
Oh,
EIN
personal
number.
guarantee. I was talking about when you build business credit, if you've been in business longer, it's easier for you to get lines of credit than if you've been in business for a shorter period of time. Oh, if you've had your Paydex score for over 2 years and it's over an 80, you can get lines of credit with no personal guarantee. But some banks may ask for a personal guarantee, which means if you default on it, they could come after you personally. Usually I only fill out the personal guarantee portion of the application if they make me. So if I'm filling out a commercial application and there's a spot for personal guarantee, I skip over it. And then if they come back and say, oh, we need a personal guarantee, then I will. But it's not that big of a deal. If you want something to show in your business name, like your car, okay, you're driving your car around, you want to write it off, you want to not have it on your personal credit for your DTI. So if you go to the dealership, you tell them, hey, I want to put this in my business name, and they'll make sure you have a commercial application. If you go to your bank to put a car in your business name, they'll just have you fill out the commercial application. The interest rates are a little bit higher on commercial loans, but it wouldn't show up on your on your personal credit. And that's how you can start with your auto loan. You can do Cap 1, Spark for Business will report. There's several credit cards that will report if you have good personal credit. So when it comes to your business credit, when you're trying to obtain some of these loans and stuff that I'm going to have a list on here for, if your personal, let's say you have no business credit established, they're going to base it off your personal credit. If your personal credit is not 680 and above, your options to build business credit are going to be limited, which you can still build credit under your business if it's new or you don't have business credit and you have poor personal credit, but it's going to be like the Cap 1 type of accounts or Granger or something that is not going to base it off of your credit score. Otherwise, to get the best terms and be approved for all the accounts that you probably want, you need a 680 plus personal credit score. No bankruptcy within the last 4 years. And you do have to have your financials. Like if you're just applying for a couple credit cards online, that's one thing. But if you like want big commercial lines of credit later or something more extravagant than just a Home Depot card or Amex or Cap 1, you have to have your financials in order. You have to have your P&Ls and your balance sheets and stuff. So if you're a business that doesn't have any of that going for you, that is something that you will need for to grow your business credit later on. So PayNet is another credit report like Dun & Bradstreet. So a lot of smaller places and commercial lenders and banks will report to PayNet. PayNet scores go from 500 to 800, and it's based off on early payments. So pay early, and then your PayNet will automatically report. There is like no DUNS number that you have to get for PayNet. It's just if that bank reports to PayNet, kind of like if they report to any of the credit bureaus, that's what it's going to report on. So credit unions, things like that, a lot of them will report to PayNet. But they're the leading credit bureau right now. Dun & Bradstreet, so it's them and Dun & Bradstreet are the biggest, PayNet and DUNS. So, but it's all about making your payments early. Experian and Equifax also have IntelliScores, which go from 0 to 100, like DUNS. But there's not many banks that report to Equifax and Experian Business, but I still like to have those on here so you can see. They also do more of the negative marks, payment history, like they do on personal on their business side, but there's not a whole lot of businesses that report to these guys like Dun and PayNet. So when it comes to these business lines of credit, if you have been in business, let's say you've been in business 10 years and you have a couple business lines of credit right now, and you go to Dun & Bradstreet and you get your DUNS number because you didn't have it, you'll have a paydex score in 30 days. If you already have accounts and you just didn't have your DUNS number. Once you get your DUNS number, that DUNS number is like the connector between your EIN and the bank. If you are brand new to business and you are just started your LLC and all that, go get your DUNS number, go open up a couple starter lines of credit. You can do secured cards at your bank in your business name. They'll report to PayNet or DUNS usually. Capital One Spark for Business is a good one that I send a lot of people to start a line of credit with them. If you have not the best personal credit and you still want to grow your business credit, one of these accounts right here doesn't even check your credit and they report to business credit. I think it's Granger. So Granger just, you can buy all kinds of stuff from them, supplies for your office, like cleaning supplies, all types of stuff they sell for every type of industry. They're a good one to help people start just if their credit is not the best. But if your personal credit is good and you want to grow business credit and you've been in business for a long time, you could pretty much get whatever you want. Any place that gives personal credit gives business credit. So if you want a Nordstrom account, don't even ask how I know that Nordstrom has business lines of credit, everybody. But they do Home Depot, Lowe's, any of those places that you want. Literally, if you open up an account in your business name, it'll either report to Dunn's if you have your Dunn's number, or PayNet or something at least. So it's good to know that if you are opening up those lines of credit in your business name, that you should have some good credit reporting, but you have to make your payments early, because if you don't, they will report negative. And we do dispute business credit. We actually have been doing that recently. It takes more time and it's a little bit more difficult because PayNet is not like a big credit bureau like the credit bureaus are with their processes, but we have been disputing them. So it's been pretty cool. Does anybody have any questions about business credit or anything that I just went over? I only did 4 secret words, so we'll just do those 4 secret words today. You need 3 out of the 4. Email them to Edyn, ejohnson@securityhomemortgage.com. Did anybody have any questions about business credit? Sometimes people want me to talk more about it, but really it's about your credit score, how long you've been in business, and what types of lines of credit that you have. I'm like a broker for business finance. So if you need like a certain type of line of credit, I have a lot of banks that I broker stuff to that will help you. But you do have to have your profit and loss and all that stuff situated and your taxes and stuff done. So, or you can talk to them and they'll tell you what you need. It's not like you can't ask them questions or anything, but I can definitely get you in contact if you need some additional lines of credit. Does anybody have any other questions? Let's see. Oops. Pay early. Pay early to me is 2 weeks early.
Because isn't it true with business credit, if you pay on the due date, it won't help your score. You have to pay it
Yeah,
before.
it's like you're late if you pay on time almost.
Yeah.
It's dumb. I know it's all dumb. That's
But
why
that's
I want to
with
teach you
business,
guys
not.
I want to teach you guys how to maneuver past all of this. Awesome. And then in regards to bulk credit, so we have awesome programs. So our programs are finance and mortgage specific. So our goal is to help your clients move forward quickly. So our programs are designed to try to have your clients ready at a 660 within 90 days. They have to do what we say. They have to do what Edyn says. If we tell them that, hey, I think with your credit, you should be ready at the score you need within 90 days. And they do what we say and we get the results that we get, because we do get very good results. They will be ready every time. If they do our 90-day program and they don't do what we told them to do, because we follow up every 2 weeks to say, hey, did you settle that Verizon collection? Did you pay that Cap One card down? Because everything takes time to update on credit. If they don't do what we need them to do quickly, it will affect the outcome. Because we do everything as if they say, oh yeah, wait, I can do this. Okay, we're disputing and doing everything as if they're doing it. So when we follow up, if they haven't done these things, or if they needed to build 2 lines of credit and in 2 weeks they have it, in a month when we follow up the next 2 weeks and the next 2 weeks, if they haven't, guess what? They're probably not going to be ready to buy at 90 days because they waited too long. So, but we keep you guys updated and we let you know. The only time people should take longer than 90 days is if they have charged off bank debt that they can't settle, or if they've had a lot of recent late payments on multiple accounts. But if they've just had a few late payments, some collections, they're lacking credit, all those things is no problem. Or if they have something, maybe they have a couple things and they can settle and they have charge-offs. I mean, they could be ready quickly depending on what they're able to do. But we get very good results, and we don't just dispute credit bureaus and the creditors. We're disputing all those other reports and other reports. There's other reports that I didn't even mention in here that affect your credit. And so we're disputing all of those things. And we're very aggressive too. We do all kinds of online stuff, complaints. We're like stalkers, let me tell you. But if they do what we're supposed to, what we advise them to do, they will be ready very quickly. And these could be clients that are in your pipeline. If you have someone that knows that they need credit help, we do free consults. We make them feel like family. So we're not going to sell them and try to make them enroll. If people are currently late on accounts, we don't enroll them either. So if we talk to someone and they're like currently 60 days late on a couple of accounts, I don't want to take their money to start them on credit repair when they're not able to pay their bills. It'll defeat the whole purpose of what we're trying to do. And so we'll teach them what to say to the bank to get on the hardship. And this is in our free consult. We give them the information that they need to call to do it, to get the accounts current. Once they get the accounts current and they're good, then we can start on credit repair. But we want your clients to succeed and you to succeed and you to be able to sell them a house. And so we talk to them like we're all partners together. My system is amazing and it updates you. My system is pretty awesome. And we attach you to them. We do co-marketing with you if you'd like us to make flyers for you. We have a link that's specific for you. You could put on your social media that says, hey, is credit holding you back? Click here for a free consult. And it will attach them to you when they do that. So you could get a lead that you didn't even know that you had. So our goal is to help you guys succeed and to help your clients. If you have any questions or anything at all, you just let me know. But my 90-day program is $499. They can split that in a couple payments. I have a 30 to 45 day program and an enrollment option if they are going to take longer than 90 days. And my girls at the office are absolutely amazing. And we pride ourselves on amazing customer service, that's for sure. So I thank you guys so much for coming to my class today. I hope this was a value for you. I truly just want to be a value and a resource for you guys and your clients. Follow us on social media. We will put you in our system. Once I bank your hours, we'll put you in our system so you're in there. We don't stalk you or anything, but if you have someone, you'll already be in there. Hey, I sent so-and-so over to you today. My girls will call them, do a free consult and try to get them going. And then when we think they're ready, because usually if they have a lender, if you're like, hey, Edyn's the lender, and we say, Edyn, what do you need their score to? And she says a 620. Once we think they're to a 620, we're going to let her know. We're not like sitting there trying to keep them in credit repair forever. I want them to be able to move forward with the loan as soon as possible. So that is how we do our business there. And thank you, Edyn, for always having me come teach.
Yeah, it's so amazing to have you come, and everybody's saying it's so informative. I am always impressed with all the things that you know, and it really is awesome to be able to help people. They get really excited when we're able to help them. So if you want,
as bad as they think.
Right, that's the thing. If they listen to you, it's never as bad as you think. A couple people asked for this class is being recorded. So if you want this class, if you want a link to the class, just email me when you send your words. A couple people said they missed one of the words. You can miss one word and still get credit. So just go ahead and email the 3 words that you do have, and then we'll still be able to give you credit.
Awesome. I'll get that banked within the next 2 days, guys. Thank you so much. Have a good day.
Bye.